Welcome to the deep dive. Today we're opening up the hood on a trading software called Galileo FX. It gets marketed with some pretty strong claims, like the ultimate trading autopilot, and even, get this, a Zen master for your trading.
Right, Zen master.
Yep.
That kind of language, especially in trading, definitely makes you want to look closer.
Yeah.
So our mission today is to really investigate, what's under the hood technically, look at the user results, which seem, well, all over the place, and crucially focus on the regulatory side, or the lack of it. What's the real risk behind that slick marketing?
Okay, good plan. Let's start with the company itself. Galileo FX is software from Orion Software Development SRL. They're based in Italy. Now, they are licensed, but specifically as a software developer, they make it very clear they are not a broker.
And that's a critical distinction. They also disclaim liability for trading outcomes. So you provide the broker, you provide the capital. They just provide the software tool.
Exactly. Tool is the keyword.
And it seems the software automates strategies that the user, well, you have to define first. They do talk a lot about setting it up for U.S. Forex rules compliance, things like FIFO, the first in, first out rule, limiting orders.
Right, FIFO, that's a big one for U.S. traders.
It is. It's a regulatory requirement. But here's the thing. The software provides the settings, but it doesn't automatically enforce compliance, the responsibility. It falls entirely on the user to get those settings right.
So you're basically your own compliance department, even with the bot. Okay. And that brings us to this whole AI thing they mentioned. Forums seem pretty quick to point out this isn't real AI learning on the fly.
No, not at all. It seems to be just automated scripts. Preset configurations, you set the rules, the bot follows them. No mystical intelligence involved, as some users put it.
It's a rules engine then, not predictive.
Precisely. It's executing basic logic like, if indicator X crosses threshold Y, then do Z. You think RSI hits 70, trigger a sell. Markets change it, don't they? A static rules engine in a dynamic market? Well, that's inherently limited.
Which explains why people report needing to constantly tweak it. Kind of defeats the whole autopilot idea, doesn't it?
Completely undermines it. And you see this reflected in the performance feedback, which is just starkly divided. You look at Trustpilot, and it's review after review praising the support, the ease of use.
Okay, but then
you go over to a site like SiteJabber. It's got a rating of just 2.3 stars from like 169 reviews. And SiteJabber actually flags concerns that some of those positive Trustpilot reviews might be possibly fake.
Yikes. Manufacturing consensus like that is a huge red flag in itself.
It really is. And some specific reports are pretty rough. We saw one user, I think on the R4X forums, saying they lost over 60% of their capital every time they tried to adjust the settings, called it a scam.
Ouch. 60%.
Yeah. And another third-party test run over 30 days showed really volatile results. Small gains wiped out by sudden sharp dips. The conclusion was clear. You absolutely can't just turn it on and forget it. Constant manual intervention was needed to avoid big losses.
So much for the Zen master. Sounds more like panic management, like you said.
Exactly. Which leads to the most critical point, really. When things go wrong, where do you turn?
And this is where the lack of regulation becomes, well, dangerous. Broker rating sites like WikiFX state very clearly Galileo FX is not regulated by any top-tier financial authorities. We're talking FCA in the UK, ASIC in Australia, CYSEC, none of them.
And that's the core issue. No regulation means zero official oversight. It means there's no client fund protection scheme if the company or your broker interacting with the software messes up. There's no enforcement body to appeal to if Orion Software, the developer, goes dark tomorrow.
So if you hit that 60% drawdown because a script failed or the market shifted, you're completely on your own.
Completely. That regulatory void, that lack of a safety net, that's the platform's most dangerous reality. The operational risk, the volatility, it translates directly into potentially catastrophic risk for the user because there's no backstop.
Okay, so let's bring this together for listeners. We've looked past the Zen master marketing. What we found is an unregulated software tool, basically running automated scripts based on user settings. Settings you have to get right, both for trading and for compliance.
Right. And the performance seems incredibly volatile, often requiring manual overrides to prevent significant losses based on user reports.
The clear advice seems to be, if you even consider trying this, use only capital you are absolutely prepared to lose. Test it rigorously in a demo account first. demand transparency. And be very wary of reports about withdrawal issues or lack of support, which also pop up.
Yeah, definitely. Which leads to a final thought, maybe something for you to chew on. If a tool is sold as autopilot, but it constantly needs you to intervene to tune complex settings just to stop it from crashing your account, how much value is that automation actually providing? Or is the complexity just sort of masking the fundamental risks of trading, making it feel sophisticated when it's really just executing simple rules and putting all the real responsibility back onto you?
A very important question to ask. Something to really consider next time you hear promises of effortless automated profit.